Celebrating 25 years of joy, celebrating 25 years of excellence. Hello and welcome to the business edition of PM Express with me, Philip Nanfu. And on tonight's edition, we'll be tracking where your funds are, both depositors and investors. Depositors meaning the customers or the clients with microfinance and savings and loans institutions. Particularly, we'll delve on the savings and loans customers. Then we'll look at the fund management industry, that's the securities industry in the country, and look at how far we've come with making good on our promise to make investors whole. So both investors and depositors will be looking at that. So we have two-pronged approach to our discussion this evening. But earlier on in the day, I spoke to the Deputy Director General of the Securities and Exchange Commission. His name is Paul Abibio. He brought us up to speed with some of the developments in the securities industry, particularly what's going to happen with your money if you were an investor of one of the 53 defunct fund management companies in the country. I want us to take a listen, or I want us to have a look at that first, then we'll delve on with our conversation.
So after the revocation, we arranged for our agents to receive claims from investors. The process started in November. We gave a deadline up to December, but we extended it to January to allow people enough time to file their claims. So the claims have been filed, we received it. We're going through the process of validating those claims, so that takes time. And it's really essential that you do that to make sure that those who are being paid are the right people, their records also reflected adequately in the records of the fund managers who are concerned as well. So that's what's going on now. In terms of the payments, government has made some commitments. The president announced this as well, and there'll be a subsequent announcement in terms of timing and how the modalities will work. So that will also be announced as we progress in the next few weeks or days.
Okay. Yeah. You mentioned you are still in the process of validating. You've also mentioned the critical nature of this exercise so that wrong people don't get the right funds or right funds don't go to the wrong people. Can we put a timeline on this validation exercise when you complete it in the house and say, okay, by this time you are done validating every single investor who was part of the revoked, the institutions had the license revoked? Can we put a timeline to this?
I think we'll make that announcements as and when. I don't think validation can take some time. Even for the SNL, some validation was just recently completed. Even though some of the revocations were actually in May of last year. So for certain transactions where it's clear to see the trail, when it's validated, payments will be made as and when that process starts. But for those that are contentious or where issues are in court and still being resolved, we'll have to wait until those court processes are also completed. So there will be some sort of trade-offs. Some payments we made in the interim, some too may be delayed subject to ongoing processes. So I think that is the framework. I think when we commence the process, we will actually come out with timelines and clarify to the general public what to expect coming from us.
Okay. There are some concerns that you mentioned savings and loans, and some are concerned. I have interacted with people who are saying that stuff is going slower with the SEC payments as compared with the SNLs and then the microfinance institutions, the MFIs. Will you agree with such assertions, and how will you put it right in the mind of investors and depositors that all is well and good with regards to the timing? Because some believe that things are going slow with the SEC. Some believe that SNLs are getting theirs faster as compared to you guys.
Okay. I think it's important for the public to understand the kinds of powers that the SEC has in these circumstances. So our powers involve the revocation. We can apply for liquidation, which is what we have done. Whereas if you compare the Bank of Ghana's powers, they can actually appoint a receiver. They can even appoint a liquidator. So for them, that process, they take possession of the assets right away. We are yet to take possession of the assets. And it wouldn't be us taking possession. It would actually be the liquidator, the official liquidator, taking possession of the assets and liquidating the business. So from that perspective, our process requires us to go to court to get the court's approval for that. And obviously that also comes with preparing the legal dossier, getting serving notice to the people who were heading these firms, and for them also responding to some of these things. But all said and done, I think you have to look at the timing. When BOG revoked, and then the sequencing, the receiving of the claims, the validation process, and then the payments. And even the government also has to make funds available, and that's a critical element to it. Government has to determine what form the payments will also take. And so that work is necessary, and you cannot belittle the kind of effort that has to go into that exercise. So that's where we are in the process. We are a different kind of regulator compared to the Bank of Ghana. We're still in the financial services, but our clients invest in a broad range of assets, which have a wider range of risks compared to the banking sector, where they do mostly loans. So that needs to be appreciated as such as well. So that said, I think our processes are on par, and we're being as proactive as we can.
In every sphere of life, there are some who are particularly skeptical about anything. Some are optimistic. Let's look at the skeptics, and some will say, geez, given this, you've articulated it properly. But some will say, no, next time I wouldn't invest in a fund management company, or I wouldn't invest in products of fund management companies because of some of these things you've explained. Yes, it's grounded in your law, it's taking time, you have to go through an official liquidator, etc. Do you think it's going to affect confidence in the fund management industry come, let's say, 5, 10, 15 years or into the future?
I think these actions are actually to boost confidence in the marketplace. And part of it is really to show that the regulator is proactive, is monitoring the industry. Another element is also for people to appreciate the risks they take when they do investments. And the fund managers have different kinds of products. And part of this exercise was really clarifying to people what kinds of products the fund managers can offer. And when you are placing with a fund manager, a key question is, what are they investing in? How do they communicate your portfolio to you? What are the holdings? So you give someone money, what is he doing with the money? What is he holding in his portfolio? An appreciation of that is key, because you could be investing in an equity fund, so you expect that they're investing in shares, and the shares have a particular behavior pattern, or they're investing in debt instruments, but are they investing in high-risk debt instruments? Are they investing in risk-free debt instruments? Are they investing in government notes, government bonds, treasury bills? So those understandings need to come out. So that's one element that we feel this exercise is bringing out in the conversation. The other element is that these are exceptional circumstances. You've had the financial sector, or segments of the financial sector, face severe crisis. And for the capital markets, this is the largest exercise of this nature we've done. And so clearly it's an unusual framework. But again, government's support, government's intervention also is there to shore up confidence, right? Because government believes that ensuring that investors get some remuneration for the risk. You do need risk takers. And that is where capital markets comes in, that risk is allocated. Those who have funds that can expose themselves to certain risks are aware of the risks they are taking. That is not to discourage them from the risk, but to say that know what risks you are selecting into, right? Whether you're going for highly risky, moderate risk, or low risk, right? And choose which area you want to go to. And a big part is the fund managers communicating to investors the kinds of risks they are assuming on their behalf. So that's one. The other element is that government's intervention is really a social intervention to support the general public, because government also feels that in a situation like this, we don't have an investor protection fund. So if you left the circumstances to the wiles of the wind, you'd have to wait for liquidation to be completed, and whatever assets are found in the firms are what will be paid to investors. So government intervention is really to also manage the shocks that people would have felt if the process was to run through. So I think overall, I mean, coming out of this, people are now more conscious of what SEC does, of what is expected of SEC entities, People now appreciate the difference between us and the banking sector. A lot more work needs to be done there. I think that's one area that we are also looking to boost this year. So we are starting to prepare educational materials that we'll put on all kinds of platforms, radio, TV, online, to educate the public on what our players do, on the range of instruments available, and how the various instruments work. So that production work is ongoing, and when it's ready, the public will also see some of it.
So that was Mr. Paul Abebio. He's the Deputy Director General of the Securities and Exchange Commission. They're the regulators for the capital markets and the securities industry in Ghana. My guest, first one, Alex Asiedu. He's the President of the Ghana Securities Industry Association. He's the man in the glasses to my far left. And in the middle of us is Tunibua Kodua Boache. He's the Executive Secretary of the Ghana Association of Savings and Loans Companies. So we're going to have this discussion and see if we can really track our funds and see where our money has gone to and whether we're going to get it back. But I want to start off with Alex and find out, listening to your boss of bosses, the regulator himself speak in the capacity of the Deputy Director General, what jumped at you in his submissions?
I guess what jumped at me was the fact that the SEC-regulated firms seem to be on the losing end of this whole cleanup exercise. You get a sense that they have not been treated. Investors who went through SEC-regulated entities have not been treated in the same way as those who went through Bank of Ghana regulated entities. And well, one could get up and say that firms committed infractions. But we need to remember that at the end of the line, behind the firm is the grandmother who needs to sort out somebody, her grandchild. It's the mother who needs to pay school fees. So they are real people. They are investors behind the scenes. And so for us, the calculus is simple. If government is bailing out and helping everybody out, then the same treatment that is being given to Bank of Ghana regulated firms should be given to SEC regulated firms. What I'm saying is that if depositors are being paid, then investors should also be paid.
Two things stand out for me there, Alex. When I was having this interaction with him, he mentioned the SEC, the Securities Industry Act 929, being a bit different in its modalities from Bank of Ghana's Act and the Banking Act, which, from what I gather, gives BOG more powers to do stuff, and the SEC doesn't have a lot of powers in there. So some could say that, yeah.
I'm sorry I didn't allow you to, but I don't think we should allow the law to, we should allow the act, whatever it says, to stop us, because he also mentioned social interventions.
Yeah.
I mean, I don't think the law says that if a firm that's regulated by the central bank collapses, all depositors should be paid. Correct me if I'm wrong. I don't think so.
Okay.
I think the government is trying to help out. So again, for us, it's simple. If the government is helping out, no matter what the law says, no matter whether the BOG has more powers than the SEC, the bottom line is that depositors are being helped. If depositors are being helped, then the poor investor who went through SEC-regulated firms should also be helped out. My worry is that if we don't treat them all the same, confidence in the investment sector is going to go down. And that sector is actually important. Assets under management between 35 and 40 billion. That's a third of banking assets. And it's growing at a very healthy clip. So if we neglect that sector, we're removing the potential for long-term capital to help grow the economy. And again, we are hurting investors who innocently put in their monies and can't get those monies back. So.
I'll come back to you on the confidence bit. The Deputy Director General mentioned some things they were doing. I want us to probe that. But let me come to Mr. Tunibua Kodua. Some argue that you shouldn't even be on this show because your members are getting their funds in a quicker manner, or more quickly, if I can say so, than Alex's guys and girls. So you really have no business here. Everything of yours is sorted. What's the current state with regards to the SNLs and making good on the promises to pay its customers?
Okay, thank you very much, Philip. Let me use this opportunity to also congratulate the multimedia.
Oh, thank you.
For 25 years.
Yes.
It's a huge milestone. And
thank you.
For the fact that you've played a key role in all these things happening and in building the financial industry and the confidence that we want to see in the sector. As you rightly said, some of the institutions, some of the customers, and at least if you read the notice from the receiver, it actually suggests that majority of the claims that the receiver received have been sorted out. As in, you remember they said that they received 360,000 claims, and out of these claims, they've paid out more than 320,000, and it's continuously being validated and paid. And so we wouldn't say we've arrived. We can only say that, yes, there's been an improvement. When all these things happened, we were here complaining. Yeah. And so when we have seen an improvement, we have to also show the appreciation and the fact that it's better than it used to be. Even though we shouldn't have gotten to where we found ourselves. But as Alex rightly said, we should also look at it as an industry. And of course, there are still individuals, there are corporate entities who also invested in the fund management companies. And so if they have been sorted out in one way or the other under the receivership process, which is not completed yet, because we are also aware of the cash component, the bond, and all those things. Let's look at, as a nation and as government intervention, how do we ensure that those who also invested under the fund management companies who are licensed by the SEC are also sorted out. And so we think that we are looking at the holistic industry, the holistic investment industry, looking at the banking industry. And personally, I think that there's been some progress in how things were as compared to previously and now. And we hope to see better. And also the fact that the government, the kind of intervention that the government brought in is something that is commendable, and it shouldn't also be seen as they've arrived, because there are some few individuals and corporate entities who also need their funds that they have not gotten. Okay. And so let's see how best we can complete the process within the shortest possible time.
Okay, I want to chip in two questions here, and the first one has to do with making sure that everybody is whole. Alex mentioned that regardless of whether it's deposit money banks or fund management industry companies, he thinks everybody tied to an investment or a deposit should be made whole. An issue of our debt as a developing country, and there's a lot of noise about our debt. Some have argued that we should put aside this issue of debt, and these are real people with real problems. Some also argue that this is a debt ballooning issue, and recently the World Bank and then the FDB had some sort of difference in terms of who was contributing more to our debt issue. Focusing on this banking sector or financial sector resolution, do you think that we are overlooking the debt issue and focusing too much on making people whole? But as a country with a plethora of problems, we should think about our debt also. Will you buy such an argument? Okay.
Personally, I think we can't focus on one at the detriment of the other. It's just like saying that you have borrowed a lot of money, and then your mother or your father or yourself or your child falls sick and you need to borrow. Will you say that I've borrowed enough and so I won't go and borrow again to go and take care of life and death issue? And so as a nation, we have to look at our priorities. Mm-hmm. Are there certain things that can wait in the queue? Are there certain things that cannot wait? Things that cannot wait, you make sure you deal with it and deal with it decisively and on time. But things that can wait, yes, then you look at how waiting, what will be the effect and all those things. So I believe that we shouldn't just focus on one angle. Okay. And I think also that we should have a holistic national conversation about some of these things. And at what point in time do we think that we are okay or we are not okay?
Okay, let me. I mentioned that there were two issues in there for you, but I think I want to give it to Alex. And when the president spoke at the State of the Nation address, I think he mentioned that repeating this exercise is something we can't come back to. I don't remember the exact wording, but I think the import of the message was that this is quite a huge deal. Alex, do you think this situation is enough to spare an issue of moral hazard amongst market players? So after everybody is made whole, next 2-3 years, somebody knows that, okay, so if I mess up again, government will come in and bail in depositors, etc. Do you think we are staring an issue of moral hazard in there?
Yes, we are. And I'll keep my thoughts to myself as to whether everybody should be made whole or not, because it creates moral hazard. It means that if people lost money because of poor behavior and they're being given back all their money, then they are incentivized to go on behaving poorly. And that's something we should look at. But having said that, for me, my point is again simple. If we have decided to forget about moral hazard and pay, then we might as well treat everybody the same way and start afresh. But if we're paying and we're treating everybody the same way, then we have to make sure that we enforce the regulations. And those who cause this mess should face the penalties. If we do that, we reduce the probability for moral hazard to be affected going down the line. I mean, there's always that risk, but there has to be enforcement going further down the line. And then I think if we do that, hopefully in 2-3 years, hopefully not, in the next 5-10 years, we shouldn't see this happening. But there has to be enforcement. There has to be, people have to face penalties for what has gone on.
Okay, let me just do a follow-up in here. Paula Bibi was mentioning an investor protection fund. Joynews and his people now have the Depositors Protection Corporation. Even though it's new, we expect it to pick up in a couple of years. The Investor Protection Fund, I don't know if you've heard anything through the grapevines whatsoever. When are we going to see one being rolled out here? And would that be some sort of panacea to some of the issues that we've seen currently?
You know what? You should have asked Paul that question. You should have asked him that question, because from where I sit, we've not had much traction. I know there's some noises that have been made. I know that there's some activity going on, but we haven't gotten anywhere yet. I mean, so if there was another crisis right now, that fund would not be ready to protect depositors or investors. So there's not been that much traction, and we probably have to speed that.
Up. Okay. This is the business edition of PM Express. My guest, Alex Assedu, he's the president of the Ghana Securities Industry Association, and Joynews Akodiabuachi, he's executive secretary of the Ghana Association of Savings and Loans Companies. Earlier on, you heard Paul Apabio, he's the deputy director general of the Securities and Exchange Commission. And we're taking a quick break. We'll be right back. You're welcome back from the break, and this is PM Express Business with me, Philip Nanfuri, and we're looking at the depositors and investors, you and I, making sure that everything is well and good, keeping ourselves abreast and up to speed with information. And now I want us to focus a bit more on the issue of confidence. And we've discussed it time in and time out again. But every now and then you have people, I have people come up to me and tell me that, so right now, where can they take their money? Last week, I had a friend WhatsApp me and tell me she has nowhere to take her money. She can't think of anywhere to take her money. Can I recommend anywhere for her? Even though I'm not an investment advisor, I can't do that. It's not my job. It's not my pay grade. It's above my pay grade. How do I give such people advice? Because the core issue was that she had lost confidence in the financial services sector. We hear that confidence is coming back, but some other people say a different thing. What do my guests feel about this whole confidence issue? I want to start with Joynews Akodiabuachi. One will assume that government stepping in and taking a decisive action to help you and I will be more or less like a confidence booster. I mean, I was watching something about the Bernie Madoff scandal in the US and how it's taking over a period of 10 years plus for people to be made whole. But here we have government stepping in, issuing bonds whatsoever, cash, making sure that all is well and good. one would expect that confidence should be back up, people shouldn't be complaining. What have you picked up so far? We've had several conversations about this, but I think every time we need to come back to this. What have you picked up so far with regards to confidence in your industry particularly?
Okay, so you realize that when this whole thing started, as at last year, the beginning of this year, last year, the beginning of 2019, when consolidation, Third Bank continued to absorb the other institutions that their license got revoked. Then it came the microfinance companies, and a receiver was appointed, and the SNL receiver was appointed with the finance houses. So people were not very sure what was the treatment. And so I remember we also spoke about the process and all those things. And that is the more reason why the receivership process has been very, very instrumental in bringing back the confidence. Now, the receiver says that I will want to make sure that anybody whose claim has been validated, you are paid. And fortunately, they are living up to their promise. And living up to your promise will also give some people some confidence that, yes, my money got locked up for so many years I couldn't have access to. And by the timely intervention of the regulators and the government, now I'm getting access to my funds. We believe that this single exercise by the government and the regulators is very, very useful, and we must always recognize it as a key component in all these things. Very soon, you will be hearing the regulators also making some pronouncements as to the strength of the industry. We have seen that the industry is becoming stronger and stronger day in and day out. If you look at the commercial banks, because DS started earlier and it ended earlier, you've seen that deposits are growing. They are now beginning to grant loans. And so we think that the other sector, the SNL, the finance houses, if we continue to receive the support that the central bank is giving to that sector, mind you, the depositor will want to see a sector that the regulator is up and doing. And fortunately, before we went on break, you were talking about, are we going to get back so that this investors fund and all those things? We believe that the kind of work the regulators are doing, both the central bank and the SEC, the kind of work they are doing, if they do not relent and they continue, and with the necessary support from all stakeholders, we are very sure that we will not have a repeat of these things, because there are a whole lot of reforms going on in the central bank. Look at the various directives and the various certifications that directors of these financial institutions are supposed to go through. And we also think that public education is also very, very key to make sure that, yes, the watchman is keeping the gates, making sure that no thieves come in. But what about the children in the house? Have they opened a certain window outside? Or are the people outside also throwing stones against the glasses and all those things? So we believe that going forward, we need to educate ourselves more. We need to let people know how to get the pointers right, so that when I am investing, I know that I will get the needed return. And what kind of return do I even have to go for? So it's a 360 kind of thing that we all have responsibilities, not only the regulator, not only government, but we the populace, we the operators. Unfortunately, we've seen this kind of thing happening.
I need to quickly ask you this. We've seen, particularly with the banking sector, a lot of extras. By extras, I mean guidelines, codes, etc. Your sector in particular, have there been some changes in there in recent times? We've had discussions before. Has Bank of Ghana told the guy, okay, we're come to do this, we are bringing out these guidelines? Have there been some such discussions?
A number of them.
So we should expect some good changes in the coming months.
It's already happening.
Okay.
You see, as we speak, more than 100 directors of SNLs have to go through certification. That is, they have to be taught again.
So regardless of your experience?
Regardless.
So if you're a big boy inside, come down, you start again?
No differentiation.
Okay.
Everybody had to go through the governance certification training. And now they are very, very also key on cybersecurity and all those things. Again, on customer focus. Now there are directives that you can't treat a customer anyhow. You need to follow certain rules. And even the credit underwriting. Now central bank has continuously issued this risk management framework to make sure that before you even grant the loan, it should pass the necessary test.
Okay.
And now their on-site inspection is serious and it is good. What does it do? It helps to protect the shareholders' own funds. It helps to protect the depositors' funds, so that what happened yesteryears we don't see a repeat.
Let me come to Alex. I was going through the SEC website a couple of days ago, putting some stuff together for a colleague, and I saw that in 2017 we had 154 fund managers. 2018 came down to 140. I think in 2020 we have 82 as a result of the 53 that exited in 2019. Then I saw that fund assets under management at the end of 2018, it had decreased from 31.06 billion to 25.57. And I asked myself, so these numbers that are in there is less going to give us more and more in terms of better assets under management, better run institutions, a better capital market. So I'm looking at it wrongly. What's the confidence game going to look like in the securities industry?
I think the answer is about the same as Tinubu said. But there's a key difference. The difference is that in our sector, our investors don't get the feel that they're being paid out what they should be paid out. And so, like I said previously, if you took your money somewhere and you hear there's a cleanup and you're not getting your money back, and elsewhere they are getting their money back, then where is the confidence? And so that is step one. That's step one. We haven't quite effected it. The SEC is doing all the things that the central bank is doing, coming out with regulations, deepening enforcement, etc. But the interesting thing is that I don't think they are as resourced as the central bank. In fact, I know they are not as resourced as the central bank is. One of the oft-quoted stories we tell is that I think they have just about 70 members of staff, including drivers and
I think it's been
and I wonder how they can do their work well without the resources that they require.
With the number of firms.
Where are they getting their monies from? And so if those components aren't looked at, paying investors who got caught in the headlights their money's back because we decided to make everybody whole. One, resourcing the regulator so that they're able to do the work that they're supposed to do well. Then it will be difficult to build confidence. And I honestly don't think this is rocket science, much as I raise my hand to admit that the government is going through its own fiscal constraints. But again, for us, it's simple. If it is being done for the central bank people, then the SEC should be resourced well enough. People should be paid, they should be resourced well enough. And then beyond that, we do the education and then the enforcement. If people think that they did the wrong thing and they got away with it, then they will do the wrong thing again. I mean, we are clever people. Ghanaians, we are clever people. We have a way of getting away with things if there is no enforcement. So for us, it's to pay out, resource the regulator, educate, enforce.
Okay. I think at this juncture, we'll take a very quick break, our final break, and we'll be right back. This is Business Edition of PM Express with me, Philip Nanfuri. Welcome back from the break, and this is the Business Edition of PM Express. My guest, Alex Asedu, he's the president of the Ghana Securities Industry Association. Tinubu Akodia Boache, he's the executive secretary, Ghana Association of Savings and Loans Companies. My name, Philip Nanfuri. We'll be wrapping up our conversation soon on our depositors and our investors in the economy. We've looked at the processes that have gone on with regards to making you and I whole. We've looked at building confidence, and Alex mentioned a very key point, resourcing the regulator. During the discussion of the banking sector, that resourcing came up in terms of personnel, numbers to take on. But we need to do more for our regulators if we want them to be as strong as we want them to be to handle issues in the respective areas. I want to come to Joyne's first and take something from him with regards to the receivership process. A friend just sent me a message. I think I have to ask this quickly, just because my viewer is watching. The bond cash issue. What does that mean? That was what he sent me. This bond cash thing. It is actually in Pidgin, but I can't read it in Pidgin. The bond cash issue with regards to SNLs and MFIs. What does it mean? I have to pretend like I don't know. What does it mean?
Okay. The receiver issued a statement beginning of the week explaining what they are doing, and the fact that government has said that they are giving them 5 billion, and this 5 billion, a portion is cash, portion in bond. What is the bond? In layman's language, is that a pledge to pay you later. And so the government says that take this cash and pay this percentage of cash now. What will be left, I will pay it later to the people. So the receiver has issued a statement, followed by CBG, who are also helping the receivership process, to explain that the bond component, if you have, say, 100,000 and they pay you 80,000 or 70,000, the 20,000 or the 30,000 left will be paid later in some years to come. And they say 5 years. And this one, there's no interest on it, because the money at which rate, whose costs. And so it is far better than not getting anything, even though if I had gotten everything cash, that would have been the best approach. And so we are also aware that the receiver in the coming days will also announce as to so far the process, and CBG with the receiver will also look at how the bond will work. And people have started receiving text messages telling them that the remainder of your cash in bond, we will communicate the bond account to you, so you can come, and then the paperwork and all those things could be given to you, so that if you decide to sell the bond, that paper you are holding is tradable as well, so you can sell it for cash. And so let's wait for the receiver and CBG to tell us how we will be able to assess the bond.
Okay. While we do the waiting for the receiver and CBG, I think I need to ask this. On my way to speak to Paula Babio, I encountered a man who was also on his way to the SEC. I think they were having some sort of whatever meeting, and this bond cash issue came up, and I overheard him saying that he's a pensioner. His lifespan may not actually meet this bond payout. Would you agree with such assertions that, you know what, even though the bond is a good idea, there are some people who just can't wait for the cash to be paid? Like, over a period of time, it's not good for them. We want it now. What do you say to that? I want yours, and then Alexis also.
Philip, that would have been the best for everybody. And that would have been also the ideal situation, that everybody gets all the money's cash now. But there's no ideal situation in this world, so long as we are on this earth. So it is far better that we have gotten some cash now and the rest in some years or some days to come. If I am so cash strapped, which it's not the best though, but I need money now, when I have that paper in my hands, I can sell it for cash, I can discount it, which means that I need to solve a certain problem now. Even though it would have been the best thing to get all cash now. And so we shouldn't see it as the best approach is the bond. The best for me as an investor, as an ordinary customer, is that give me all the monies that you says you have covered. But you and I know there are a lot of constraints as to the cash even the government supposed to give. And so there's little that we can do at this stage. All that we can do is to continue to ensure that the little that they have made available, I have it. And that is where I want to encourage CBG to the staff, the frontline staff. You know the receiver has credited or has sent a list to the CBG to credit the customer's account. They have created virtual accounts and all these things, sent messages. And you and I know because of technology, some customers may not get their text message. Yeah. I know somebody last week I was in a training with, I got my text message and I said, have you gotten? He said, I haven't gotten anything yet. The following day, I asked her that, can you check with CBG? Maybe. He checked and CBG confirmed she has received, the account is created for her, the money is sitting on the account. And so it's possible somebody has not received a text message, yet his or her account has been credited. Okay. So technology and all these things, all that we can plead for is let's exercise some restraint, let's support the process. CBG employees, ensure that you also smoothen the process. You don't place a lot of restrictions. There are some customers who may come angry already because their funds have been locked up for so many years. They are so angry, they need the money. And so let them come with their anger. But as professionals, as bankers, that's why we are there to help solve people's problem. And CBG, please let us support the process as you have already been supporting. We know you can do it, so please do better.
So if they give them on one cheek, they should turn the other cheek and then take it also.
And that is what even the scripture says.
Alex, in local parlance, we say filigadoci. We want to see it. Your industry is also going through, I would call it a little snag with regards to capping of what is going to be given. What will you say to this discussion of getting money now as against later? Some will talk about inflation, present value, future value, all that fancy stuff, and then the capping also. What are your thoughts on that?
My thoughts echo what Chunibo has said. The ideal situation for somebody who's lost money would be to get all the cash back. But we are living in less than ideal circumstances, and the government is also has its own fiscal constraints. So the bond, if that is what the government can do, that is fine. We wish it could do better, but we've gone cap in hand, so this is what we will take. Hopefully the cash component can go up. But for people like the pensioner that you were talking about, if the bond is going to be made tradable, and I hear it's tradable, meaning in layman's terms that you can buy and sell that piece of paper, then it makes it a bit easier. So you could sell it, obviously it will be at a discount, not at the full value that you are holding. You could sell it to somebody who doesn't need cash and can dispense with cash, so that he holds the paper, you hold the cash. I guess with that, there should be more education for us, for people out there. We should educate more people. Once the receiver and whoever's in charge of the process comes out with the modalities clearly, and we know the percentages, and we know what's going to happen, we should go out and say that this paper is tradable. So if you need cash and somebody has the cash, he can exchange with you at a discount, and then it's making the best of a less than ideal situation.
Let me throw you this final one as we wrap up and given our time also. At the industry association level, 53 firms out of the system. If my data was right, 82 left. I don't know about licensing. I'm sure the SEC would have that kind of data. I will not bother you with that. But do you think at an industry level, amongst your players, amongst yourselves, all is well and good with you guys for now? Let's take away the issues of the settlement of funds, which is, in fact,
Philip,
the biggest issue.
I won't let you land. Ask me the question after the funds have been paid out, and then I'll say that we're making progress.
So the liquidity is key.
The liquidity is key.
You need it.
I mean, we need obviously there will always be players out there who are stable, but the crux of the matter is that there are liquidity issues, and they can only be solved if the monies are paid out.
Nice. TK, for your SNL friends, and I know you also have friends in the MFI sector, it's all well and good. Simple question.
It's better.
Better than Alexis.
No. It's not that you can't compare oranges to apples.
So who is the apple and who is the orange?
Okay, so it's better, but as he said, if we get more funds, and two, which is very, very key, and I must say it again, government should sit up and come up with a policy that supports non-bank financial institutions. Policies. As a country, the last time we had microfinance policy was 2007. How many years now? 12 years now. And no revision, nothing has come up. It's a cake. So we don't have even policy to guide what to do with the microfinance subsector and the other non-bank sectors. We are looking at financial inclusion. Now, for us to achieve this financial inclusion, please, governments and successive governments since 2007, we don't have clear policies that will help propel and grow that sector. And so going forward, as the regulators are doing their part, governments, it is now your responsibility to now bring that one.
I need to just chip in this final bit on financial literacy. A couple of weeks ago, we hosted a group here on the Joynews platform on our business show earlier on in the day. They were looking for governments. They presented a petition to the Minister of Finance to revamp the National Financial Literacy Agenda. Now, in the wake of all this, their argument was that we need financial literacy now more than ever. I want to give a minute each to you guys because of our time. Who should bear the brunt of literacy? There are some institutions that may not be as resourced as others to undertake nationwide big campaigns. Does it fall on industry, regulator, or both of them? And how do we, the consumers, also come and fit in there to help disseminate information to the nooks and crannies of Ghana? I want to give a minute each for this.
One, the government has an agenda to achieve. If there is a clear policy, following the policy will help. Two, the industry, those who have opened their businesses also have responsibilities of also educating the public. Fortunately, industry and regulator, like the SNL, the finance house, and microfinance companies, we've partnered with the central bank that we're going to have a certain program this month and next month.
Okay.
And so joint efforts will also help. As we educate ourselves and as we ensure that we do the right thing all the time, the customer will be very confident to continue to do business with us.
Alex?
Industry as a whole, regulator, and then individual firms within should take it up a bit.
Okay. So you've heard it all here on the business edition of PM Express with me, Philip Nanfuri. My guest, first one was Paul Abibio. He's the Deputy Director General, Securities and Exchange Commission. He couldn't join us because of his busy schedule, but I went to him earlier on and we brought you that playback. We'll bring you more bits of it in the course of tomorrow and next week. We also had Alex Asedu. He's the President of the Ghana Securities Industry Association. And Tuniba Akodo Abuache, Executive Secretary of the Ghana Association of Savings and Loans Companies. My name, Philip Nanfuri. I wish you all the best. Happy Independence Day. Do celebrate, but do so in moderation. Celebrating 25 years of joy and media excellence. I wish you good night.